Welcome back after the break. We are discussing 3rd and 4th September GST Council meeting and what should one expect out of it. And one of the important sectors where the expectations are is insurance sector. The expectation are that there might be 0% GST, there might be 5% GST. There are multiple reports, multiple angles, and even ET Now had reported earlier that a letter has been written by the industry saying that input tax credit issue must be resolved. To discuss all of that, we have with us Nilesh Sathe, former member of IRDAI. Mr. Sathe, my first question to you for our viewers, what should one expect? Will there be a differentiation in health insurance and life insurance as far as GST rates are concerned this time?
See, actually, the group of ministers have recommended that it should be nil GST on both life and health. Again, we do not know finally what is the decision that will happen. But what is recommended by a group of ministers is that there should not be any GST on life and health. So I doubt if there will be any differentiation between health and life. Actually, these are necessities of life. Government has responsibility to provide security and health, but it is not able to do that. So when people are paying premium, at least government should not think of earning revenue out of it. So it has to be nil. But again, let us wait and see.
That a point taken, and agree with you. Also want to get your sense on the entire input tax credit aspect of this. Now, even if the GST is brought down on insurance premiums, the actual impact will only be seen if we have some more clarity on the ITC front. What are your expectations? Are you expecting to hear something along these lines on the meeting on the 3rd and the 4th?
See, the earlier rules provided that there will not be input tax credit if the rate of GST is less than 12%. But again, it was old provision. Now, when GST rate rationalization is happening, when there are going to be only two slabs, 18% and 5%, there is a possibility that government may allow input tax credit for 5% services also. We do not know that. So, but let us presume that it is not there. Then can we work out what is the likely impact on insurance premium? Let us work out on these lines. Suppose the premium is 1,000 rupees on health insurance or term insurance, which we call as life insurance. Out of 1,000 rupees, 750 rupees in general goes towards mortality or morbidity. Morbidity in case of health. 150 goes towards expenses and 100 is towards solvency margin and profit margin and so on and so forth. So the input tax credit was not available on entire 1,000. It was available only on 150 expenses. Again, the rate was varying. On some items, it was 5%, on some 12, on 18, so on and so forth. But let us presume it was 18%. What may happen, suppose input tax credit is not available going forward because the rates are brought to zero. Then on 150, when insurance companies were taking a credit of input tax credit, which was 18% on 115, it comes to 27 out of 1,000 rupees of premium. There is a possibility that the premium may go up by 27 rupees instead of 1,000 rupees, it may become 1,027, means the premium will go up by 2.7%. But again, will it go up? That again will depend from insurance company to insurance company, because there is a possibility some insurance companies may absorb it in their profit margin. Some insurance company out of entire 2.7 may absorb half of it into profit margin and increase the premium by half. Again, there are a couple of companies which are not considered input tax credit while arriving at premium. So for them, there is no profit, no loss. So there is no possibility of their premium going up. So these are 2-3 scenarios. Let us wait and watch, because unless GST Council, which is meeting now on 3rd and 4th, finally decides as to what modus operandi should be operated in case of insurance premium, whether it should be 0, it should be 5, whether input tax credit should be given, should not be given. These are all only predictive analysis that we are making. But fact remains that there may be slight increase in premium. But for a consumer, when he was paying 118 rupees today as a premium, including GST, he may have to pay either 100 rupees or
Right.
101, 102 or 103, not beyond that. So
Sure.
he is definitely going to save 15 rupees at least. So this is certainly going to benefit him, and that is the purpose why Prime Minister announced it, that the government wants more money to be in the pockets of consumers so
Correct,
that they
Mr.
spend
Sathe.
more. So the consumer of insurance will be in a position to spend 15 rupees more. So that is whole of the purpose of government.
Absolutely, Mr. Sathe, that makes a lot of sense, and thank you for breaking it down so beautifully for us and for our viewers. On that note, we'll let you go. Appreciate you joining us on the show today.